Hey traders, interesting week in the markets. So we saw a big sell-off in the S&P, which led to quite a lot of dollar strength and some interesting market action. But where we sit now is kind of at the precipice of kind of two diverging paths. We're either going towards stimulus, continued dollar weakness, continued precious metal strength, continued Bitcoin strength, basically a continuation of the trade we've been having since March, or we're starting to see a turn in the dollar consensus, which means we're heading towards dollar strength, which is pretty much a complete change in the narrative that we've been trading in the markets for the last 3 or 4 months, or basically since March. So what I believe is occurring right now is more of a corrective price action for dollar weakness moving forward, which means more stimulus. And some of the charts are showing us that. I'm going to run through those charts at the moment, or I'm going to run through those charts now and show you exactly what I'm looking at that signals to me that we're going towards a new stimulus package moving forward. So here we have the dollar. As you know, we just came out of a fairly long consolidation, and it looks like we're breaking to the upside. Classical chartists would draw in a trend line here and say we've broken out to the upside and we're off to the races. But I'm more in the lines that all of this is still a corrective structure, and we're going to start to see a turnaround in the dollar in kind of the next day or two, maybe heading early next week. Simply for the reason, if we look at the lower corrective structure, and you guys know I'm all about corrective structures, we see here we are approaching the top of this lower degree corrective structure, impulse, correction, impulse, towards this 9470 region. And this is kind of the make or break region for us. And why I believe we're going to approach this region and fall to the downside, and then zooming out, you'll see all of this is just going to be a corrective price structure for a continuation of the dollar weakness moving forward. And one of those examples, one of those charts that is giving us that is the S&P. So we go to the S&P and we take a little bit of a zoom out. You see that's exactly what we've been looking at over the last, basically since June, we've been in this corrective structure. It didn't seem corrective because of the rally, but I believe myself that this was a corrective structure. We have an impulse to the downside. We have choppy corrective price action, which ends in a rally to the upside. And then we have a strong pullback down towards this 3151 region. That being said, if we zoom into the lower time frames, you'll see exactly what I'm looking at. We're looking at an impulse down, A, B, C, D, E, expanding triangle, and this final rally to the downside is the final push to the downside before a turn in the upside back. And then we're going to start to see a rally towards 4,000. So if we zoom out all the way to the 8 hour, even all the way out to the dailies, you'll see that what we're looking at is this big structure impulse up, and we go into a relatively corrective structure in comparison to that first impulse, and we've now pulled back. So we're getting this to the downside now. And now we're going to see a turn to the upside to complete the structure, which means a move and push up towards 4,000. And the one thing that's going to push stocks up to 4,000 is another stimulus package from the Treasury General or from the Senate. If we go look at the Treasury General account, we still have an extra, basically $1 trillion sitting in the account. You see the average of this account is more towards the line of 400 billion and should be targeted at being around 400 billion in this range. But if we see since basically March 25th, we had this huge surge up towards 1.8 trillion. We topped out at 1.816 trillion. And that needs to be drawn back down to 400 billion if it is going to be in line with what the targets for this general account is, which means there's approximately $1.4 trillion that need to be put to work in the economy in order to bring that down. And I believe that's where we're going to start to see a stimulus package being drawn up. And when we see the S&P fall, let's say another, zooming into the lower time frames, you'll see it's going to fall another, if we reach our minimum targets only from this recent rally, it's going to fall another 5%, potentially another 8%, which means we're going to be down between 12 and 15% from the highs. That's going to be enough for me, for policymakers to look at that and say, we need another stimulus round to keep these markets supported. And especially heading into an election, these elected officials are going to want to see a rallying market heading into the elections. Trump and his campaigners are going to want to see a rallying market heading into the elections. And with about 6 weeks to go, if I'm not mistaken, until that election, that's the time we're going to start to see a turn in this market and a rally to the upside. So be very cautious of that. And we take another look at some other examples of why I think we're going to continue to see that. Aussie dollar yen. Typically, the Aussie dollar yen rallies in a risk-on environment. As you see, when we started to see stimulus checks from back in March, we started to see a strong rally up towards June. And then June was the beginning of that corrective structure, very much along the lines of the S&P. We saw a nice big A wave down, choppy corrective price action up towards 78, and now we're seeing that big move down. Now, I believe all of that is part of an ABC correction, and we'll see a big turn to the upside to follow this, which will mean the big structure is this big impulse up, which leaves us with price targets on the Aussie dollar yen of around about 87. So big rally to come in the Aussie dollar yen, which means risk on, which means stimulus. Another example we're looking at would be some of the precious metals, especially silver. Looking at silver, as you can see, we had a big strong rally up from March all the way up to June, into August, and then we went into this big corrective structure. We are off at the moment 27% from the highs, and there's a nice corrective structure. As you know, we've got a big impulse down, ABC up, and then a nice big ABC to the downside. So what we have is a really clean corrective structure, which indicates to us more upside in silver. And silver rallies in these inflationary environments, and inflation at the moment is not actually inflation, it's the perception of inflation, which means monetary stimulus. It means another stimulus package. So a lot of these charts are pointing towards another stimulus package, which means we are very dollar bearish heading forward despite the continued turn. We have classical chartists talking a lot about this recent break of an important trend line, which we will draw in from here up at the highs. And it's saying, well, we just broke this trend line to the upside. That's going to be a break and a move to the upside. I think it's too early for that. I don't think we're in line for that right now. I think what we're seeing is a corrective structure, and we're going to see continued downside. I think that dollar turn is going to come. We are very close to those levels at the moment, but I still see one more leg lower down towards 87, because that's what the S&P is showing, because that's what platinum is showing at the moment, because that's what silver and gold are showing at the moment. It's just Aussie dollar yen showing the same thing. So several charts really showing a continuation of that reflationary trade that we spoke about back in March. And we are going to see a turn moving forward. I just think it's too early to see that. So trades we are looking for right now, biggest trades we're looking at, euro US dollar, I believe is a great trade. Once we see the end of this corrective structure, which I believe is very soon, around 1.16, then we're going to see a turn to the upside. And if we zoom out to the higher time frames, as we know, our higher degree structures are pointing towards moves up towards kind of 123, potentially as high as 128. I'll be surprised if it gets that high, but I do want to see 123.5, 124, that region, as a minimum upside target for the euro US dollar. So for now, that's the picture we're looking at. We like the euro Oz, we like the Aussie dollar yen long. Basically, all the bearish US dollar trades. Aussie dollar US dollar is also a great looking trade to the long side, given the structure that we have. New Zealand dollar looks pretty good as well. We just don't like the pound. Pound's looking really weak across the board. US dollar Swiss is very choppy. US dollar yen is very choppy. So the trades to focus on, in my view, are euro US dollar, Aussie US dollar, and New Zealand dollar US dollar. Also, silver looks like a good trade. And obviously the Aussie dollar yen. Probably the best of the lot is the Aussie dollar yen if you can find a good entry. UK oil is going to rally, US oil is going to rally. We believe oil is going to be one of the top performing assets moving forward into Q4, and we believe the S&P is going to rally really nicely. And obviously Bitcoin should perform really well in that scenario as well. Cool, guys, keep an eye on that. It's really important that we look at the news, make sure we're on track, keeping a finger on the pulse of that stimulus package announcement, because when it comes, we're going to start to see these markets moving. We've been, like I said, we've been in correction since the end of July, since the beginning of August. So that's a very long, drawn-out correction. And what that means is the lack of volatility begets volatility, which means we're going to see a big move out of this region once that stimulus check is announced, or I believe is going to be announced. Obviously, we're not soothsayers. Potentially, we've got this one wrong. So you have to be cautious as to the narrative moving forward. If we've got it wrong, we'll definitely be looking for those dollar long trades, those dollar bull trades, because it is the end of an era. And like I said at the beginning of this video, we are the divergence of two paths. And if we don't get that stimulus check, we are going to see the dollar rally in a big way, which means everything is going to hurt. The S&P is going to struggle. I think Euro US dollar will go to parity, pound US dollar is going to go to parity, and we're going to see precious metals struggle, especially copper. Copper is going to pull back strongly to, I believe, under $1. And you're going to see that basically illuminate the rest of the markets in a very bearish light. And yeah, that means we need to be very cautious. So cool, guys, take it easy and we'll chat soon.